The price of oil is stuck in a tight range just above the $50 mark, but is there more happening in the market than meets the eye? Joining me to find out is Michael McKenzie, our markets editor. Mike, to most outsiders, the movement in the oil price over the past week has seemed pretty uneventful, but you've been following this closely. Is there more happening than we realize?
Well, yes, actually, it's quite an interesting development that we're seeing in the front few contracts, futures contracts for Brent crude. Now, Brent crude it's got back above $50 a barrel. It's kind of staying there. The backstory here, of course, is that OPEC, together with Russia, last November instituted a production cut, which was seen as trying to shore up the oil price. Now, what that has done, of course, is it's encouraged US shale and gas to really start pumping a lot more. So we've got these two countervailing forces, basically. We've got OPEC trying to get production down and try and support the price and keep it above $50 a barrel.
Which has worked somewhat.
It's worked somewhat. But the real issue here is that the oil market keeps looking at the future and saying, well, how long can this really continue? We're not seeing the inventory glut really subside. There's also the classic, we think, OPEC members are essentially pumping more and breaking the production curbs. So there's a lot of moving parts, but in general, there is some hope here for OPEC in that if you look at the Brent futures contracts for early next year, they're actually now higher than the current physical price.
So on that note, is this the start of a more sustained shift then in the oil futures curve?
It could be. I mean, backwardation is something that we haven't seen since oil was above $100 a barrel. And what it suggests is that if you think the oil price is going to rise in the futures market begins to price that in. And that would be a sign, at least to OPEC, that that the market is sort of starting to think that they could be succeeding here in getting down the inventory glut, and that as demand rises as well, that it therefore justifies having a higher price for futures prices in 2018 rather than today.
Okay, thanks, Mike.